October 7th. Man, the financial news cycle, it never slows down, does it? Feels like we're wading through a sea of headlines today, each one a potential tidal wave or maybe a ripple in the pond. So how do we make sense of it all? How do we separate the game changers from the noise? That's what we are here to do. Dive deep, cut through the jargon, and hopefully arm you with the insights you need.
I like that. It's about connecting the dots, seeing the bigger picture, understanding why these headlines even matter in the grand scheme of things.
And speaking of headlines that matter, we've got Rio Tinto, mining giant, right? They're considering buying Arcadium Lithium, and we're talking big money here, $4 to $6 billion. But here's the thing, lithium prices are dropping. And we were all told, weren't we, that lithium was the future, the golden ticket to this whole EV revolution.
Yeah, you're right. Lithium demand, especially for those EV batteries, it's been sky high. But here's the catch. New lithium mines. They're coming online, increasing that global supply, and that can push prices down. So is Rio Tinto making a mistake? Or are they being opportunistic? Remember, they've got a history of making these bold moves, especially when others are shying away.
So it's all about timing. Buy low, sell high, right? But what's the risk tolerance here? Is Rio Tinto playing chess while everyone else is playing checkers?
It's definitely a calculated gamble, that's for sure. If lithium prices bounce back, which they very well could as more people make the switch to electric vehicles, Rio Tinto, well, they're sitting pretty. They could end up controlling a significant chunk of the lithium market, but if those prices don't recover, well, that's a hefty price tag to pay for a miscalculation.
All right, shifting gears here a bit. Moving from the mines to the world of medicine. Activist investor, Starboard Value, they just snagged a sizable chunk of Pfizer. Now these guys, they're known for shaking things up. They're like, imagine going to a friend's house and they decide to rearrange your furniture. You know something's about to change.
That's a perfect analogy because you hit the nail on the head. Activist investors like Starboard, they don't buy stakes in companies just for the fun of it. They want to see change, and usually that means changes that benefit their bottom line, that increase shareholder value. So we could be talking cost-cutting, shifting research priorities, maybe even selling off entire divisions of Pfizer. It's all on the table.
So what's the game plan here? What's the end goal for Starboard Value and Pfizer? Any guesses? Could they be pushing Pfizer in a whole new direction?
Still early, right? But Pfizer's been a bit quiet lately, and that's never a good sign in the pharmaceutical world. So Starboard might push them to streamline, maybe double down on their most profitable medications, maybe even go on a buying spree themselves. We'll have to wait and see.
Buckle up, because this next one is a big one.
Yeah.
Chevron, the energy giant, is shaking things up. They're selling a huge chunk of their Canadian oil sands assets for a cool $6.5 billion.
Now that's a headline grabber, especially because Chevron's been pretty vocal about shifting away from fossil fuels, investing more in renewables, right? And this sale, it falls right in line with that strategy. Oil sands, they're expensive, they're environmentally controversial, and let's face it, the world's moving towards cleaner energy.
So what does this mean for the future of oil sands, especially with the world shifting towards renewables? Is this the beginning of the end, or is there still life in those oil sands?
It's a really interesting question. This sale is significant, not just because of the money involved, but because it makes Canadian Natural Resources the buyer, a major player in the oil sands market. But it also underscores the challenges the sector faces. As the world goes green, companies like Chevron, they're making strategic decisions, placing their bets on the future of energy.
So we've covered a lot of ground here, a lot of big moves. But for the average person, what do these market indicators really tell us? Like, U.S. Treasury yields are up, which, let's be honest, could sound like a foreign language to some people.
Absolutely. Not everyone speaks Wall Street, right? But it's important. So, in the simplest terms, when those Treasury yields go up, it often means investors are feeling a little risk-averse. They're worried about inflation eroding their returns, so they're looking for safer bets. And U.S. Treasury bonds, those are considered a safe haven.
And across the pond, European stocks, they're taking a bit of a dip too.
Yeah.
Is this connected to those rising Treasury yields we talked about, or is there something else going on?
You know, it's rarely just one thing. Global markets, they're all interconnected, right? One sneeze in one corner of the world can give another corner a cold. So those European markets, they might be reacting to the same inflation worries, but then there are always region-specific factors in play too. Political instability, economic data, you name it.
It's a delicate dance, isn't it, this whole global market? All right, before we let you go, let's squeeze in a few rapid-fire news bites. We've got the Barnes Group, they got acquired. Equinor, they're going big on wind power with a stake in Ørsted. And Stellantis, Get this, they're going to be making Jeeps in Italy. Who would have thought?
So much happening, so little time. The Barnes Group acquisition probably points to consolidation in the industrial sector, something to keep an eye on. Equinor and Ørsted, that just goes to show you the momentum behind renewables, it's real. And Jeeps in Italy, well, that's globalization at its finest, isn't it?
We covered a lot of ground today, a whirlwind tour of the financial world. But if there's one thing you want our listeners to take away from today's deep dive, what would it be?
Today was a reminder. The financial world, it's dynamic, it's constantly evolving. Companies are always adapting, investors are placing their bets, and the global landscape can shift beneath our feet. The key is to stay informed, stay curious, and don't be afraid to ask questions.
I love that. Stay curious. And on that note, here's a question for you to ponder. If you were calling the shots, sitting in that CEO's chair, or maybe managing $1 billion portfolio, what would be your boldest move in today's ever-changing financial landscape? Think about that. And we'll see you next time for another deep dive.